Hi, this is Vijay Pamvani here, and I hope you're doing well in the markets, you're earning good profits, and the markets are treating you well. This video is about an aspect of the market which some of you might be aware about, but I'm sure a majority of participants in the market are not aware of the full facts on this issue. Today morning, I happened to scan through the news, and a leading pink paper has mentioned that recently they have observed a lot of participants tending to basically skew towards the Dabba market or the Dabba trading market. What exactly is this Dabba trading? What are the mechanics and what makes it go? I took a deep dive on behalf of my viewers so that I could present the facts to you. The first and foremost thing that I would like to begin with in this video is Dabba trading is not recognized, encouraged, or even legal as per the Indian laws. So this is a form of trading where transactions are off the books, though number, black money, call it what you want, and therefore are not disclosed in your IT returns, which is why the government does not recognize it, does not encourage it, and deems it illegal. How does it go and what really happens and why does it happen? First and foremost, a Dabba trade is a trade which is off the exchange, and therefore the participant has no right to redressal or to complain to anyone about it. Secondly, all the payments given and taken are in cash, which is off the records. Thirdly, in most cases, the guy running the Dabba operation or the illegal trading operation does not charge you a span margin or mark-to-market money, etc., etc. He might insist on a lump sum token security deposit, and after that you get to trade all you want. Since there is no trading on the exchange, there is no STT or any other charges involved, which is why people get tempted to try this out. And this is where the problem starts. I'm using the word problem here. Now, there are two types of Dabba operators. One is somebody who actually initiates your trade in the exchange but does settlement with you in cash, which means there is actual money involved on his books and he's investing in span margin, mark-to-market margin, and therefore he charges you a higher brokerage on these kind of Dabba trades. You're the only guy who's paying in cash. Somewhere or the other, the transaction is appearing on his books. Now, this guy is actually taking a risk, and therefore, to reward himself for taking that additional risk, charges you full brokerage. Then there is the other guy who does not enter the transaction into the exchange servers itself. Therefore, no transaction actually takes place. He is your counterparty. Now, what is the concept of a counterparty? I've explained to you the snapshot window and the quick view market window, which you get to see when you click on F5. There are 5 best buyers, 5 best sellers. Now, when you want to buy, you need a seller to sell to you so that you can buy. So when you're a buyer, the seller is your counterparty. He is the guy who you buy from. So assuming you want to transact in the Dabba market, and if the trade is not going through the exchange, your counterparty is the Dabba operator himself. Now, since no transaction actually goes through the exchange, he does not pay any span margin, he does not make himself susceptible to mark-to-markets or pay any brokerage to any broker. This guy is taking an additional amount of risk but making no capital involvement. In that case, he might charge you a whole lot less brokerage. But this is more dangerous, I must warn you. He'll charge you more brokerage, which is dangerous. There is actually no transaction taking place. There are instances where I've heard, since no transaction has actually taken place in the server, And when the client is actually losing money but not yet squaring up, or even if the client squares up at a loss, these guys even give you credit. Why? Because hey, he doesn't need to pay anyone at all. No transaction actually took place. So which is why he's giving you credit. He can afford to because he's your counterparty and he's going to keep that money. Compared to this guy, the Dabba operator who initiates and trade into the exchange is taking a bigger amount of risk and charging you higher brokerage. There, the possibility of things going very wrong are fewer, relatively. And remember, it is still illegal. I repeat, I am not encouraging you or trying to entice you into Dabba trading. But what happens when the guy who you owe money to and has given you a liberal amount of credit and you do not happen to pay? Remember, this is like a gambling debt. This is where things can get ugly. Recovery agents might come to you. This is an aspect which people don't really think before rushing headlong into something that they should not be doing. Right? Now, when I said I will explain to you what can go wrong, this is what can go wrong. Enforcement agents, recovery agents, etc. might just start knocking on your door. Secondly, if at all you happen to make money consistently, there are chances, and I've heard reports from people. Remember, having spent 34 years in the market, I know how to keep my ears to the ground and get information or market intelligence, as it is called, from the system. So I've heard reports where a trader who makes consistent amount of money and in case he's transacting in this illegal market, the Dabba operator gets tired of paying him and might just say, okay, I'm not paying you, go do whatever you want. Can you actually enforce it? No, because there's no contract, there's nothing in writing, the entire trade itself is illegal. Which is why it's one more reason why it's a perfect example of what not to do, right? Now, why does it thrive? Why does it survive? Like I said, no margin, and therefore the weaker hands have a method of participating in the market, and human nature being imbibed with greed. You're hearing stories of people making money, or rather minting money off late, day after day, buying in the morning, selling in the evening or selling in the afternoon, and you get a feeling of left out, or FOMO as it is called, fear of missing out. You want to participate, but you don't really have enough money to pay margin in a broker's account and then trade. So this is where people get sucked in. Unfortunately, it is these very weaker hands who do not have recourse to remedial measures, which is why you should not be doing it. And time and again, both the National Stock Exchange and Securities and Exchange Board of India has been issuing advertorials in the leading business papers that this is something you should not be resorting to. But this market does exist, and I owed my viewers an explanation or a narration of what it's all about. Can this market actually impact prices? It is very difficult for somebody to conjecture. Remember, we are conjecturing because nobody knows the extent, the turnover, the exact amount of money being given and taken, because it's all hush-hush. But since a limited amount of trades do go through the exchange servers, many of them are where the Dabba operator is your counterparty. Since a limited amount of money does go through the exchange servers, there might be a slight impact on prices. And there is no mark-to-market system of payment except on Fridays. So the closing price of Friday determines whether you are going to have a debit or a credit. This is, in sum and substance, what the Dabba market is all about. You and me, as legitimate taxpayers, as common citizens in this country, will obviously choose to trade through a recognized stock exchange or RSE platform through a SEBI registered broker, and will insist on a contract note, a proper bill, and all communication in writing. That's the way to go forward and to actually make profits or losses which are recognized and accepted by your assessing officer when you file your income tax returns. Let's play safe. Let's be on the right side of the law. And with that, I bid goodbye to you in this video till we meet again in my next. Do take very good care of your trades, your investments, your friends, your family, and have a very profitable day. In case you're watching this video on YouTube, please don't forget to click like on this video and subscribe to my YouTube channel. In the comment section, do let me know what you think about this video and what you would want me to record in my next one. Also, let me reach out to your fellow traders who are interested in knowledge-based investments and trading by recommending my video to your family and friends. Vijay Bambwani signing off for now. Thank you for watching my video. Bye-bye. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.